Will earnings justify the stock market's valuation? Check out our market update to find out. Hi, Jim Gore from THOR Wealth Management. Well, we talked before about the high valuation for the S&P 500 under a number of measures. However, one of the things that we haven't talked about is earnings. And let's look at these charts here that I think are very important. First of all, this is looking at earnings of the S&P 500 and the forecasted earnings from analysts. And you can see over the next year, they're expecting 25+% growth in earnings expectations. What's more important is that those expectations are well above the trend line. And when you have that expectations, well, something should be happening to increase those earnings. And that's why the market is continuing to stay fairly high, is because the analysts are expecting the companies to do extremely well here. Well, the question is, will they be able to do that in the future? Well, one of the things that we like to look at is operating margins for the S&P 500. And they are at historical highs, over 13%, the margins right now. And you can see here that we had a big shift in margins for US companies since the middle of 1990s. And that was deglobalization. Deglobalization allowed companies to make more money because they moved their operations overseas with cheaper labor. Well, if you're able to produce your goods at a cheaper cost, that automatically increases your margins. And we've seen margins increase significantly. So we have high margins, and we have the expectations are much higher. Well, will the earnings reach that? Well, there's some headwinds for reaching that 26% growth in earnings. And we see it as three problems out there that are majorly weighing on whether they can reach those expectations. First and foremost is you've gone from globalization to deglobalization. So companies now are moving back their operations either to the United States or closer. And with that, there increased cost for getting that done, and you're going to be paying higher wages in order to do it. Second thing is tariffs. Tariffs are possibly embedded tax to corporations. Corporations benefit under the first Trump administration with a lower tax rate. Now, with these tariffs, they're paying for the tariffs. And Trump came out and said to Walmart, hey, don't increase your prices, swallow those tariff increases. Well, if they swallow it, that means as a shareholder, I'm going to end up paying that in my operating margins going down. And third, and you have to watch this very closely because corporations, over 60% of their cost is wages. And we've seen in the last three reports that the personal income has gone up pretty significantly, 0.8% in both the month of April and February, and up 0.7% in the month of March. So with those increased costs, income is going up. That's a good sign for you individually, but the cost for companies has gone up, and that's going to weigh on their profit margins. So you have to sit there and say, well, are we going to get 26% earnings growth with these three factors? Are they going to weigh on it? Chances are analysts' expectations are too high. However, there is one good story here, and this is what corporate managers have done here in the United States. We're very entrepreneurship with our management of our publicly traded companies, and they have actually reduced their, and made more profit per unit that they produce, and that's with automation and also companies adjusting. So the question is, will companies be able to adjust enough to get up a 26% growth rate in earnings, or are those three headwinds going to impact earnings? In our opinion, those three headwinds are going to be very, very tough to overcome, and we think the expectations are too high for the S&P 500. And if expectations are too high, that means with the overvalued market, it's still overvalued and it's not worth the valuation, because in order to get that valuation, it has to grow at 26% in earnings over the next year. If you have any questions or concerns, as always, reach out to us at thorwealthmanagement.com or give us a call. Take care and talk to you in a couple weeks. Subscribe to the THOR channel today.